Well, hello and welcome and welcome and hello. It's Danny Claus. Welcome and hello, hello and welcome. Good morning. It is, of course, Christmas Eve. Welcome and hello, hello and welcome. I am very tired, just getting a little bit of coffee in my system. I don't know if it's a half calf, double calf, decaf, but it's that kind of day. It is Un Poco Mas, the show where we try to bring you just a little bit more even around the holiday season. Guys, I wanted to come on because I'm just, I know I've been harping on SMCI ad nauseum. And, sometimes I kind of get stuck on one stock because I just see it as just absurdly undervalued. Like, that's where I am right now with Neo. Um, that's where I was a few months ago with SoFi. Still love SoFi. That's where I am right now with SMCI. This stock ran well over 100, and rightly so, on the back of explosive growth. This is a stock where market makers sold a bill of goods with their friends in the media and the short sellers, the short reports, the short weighing all stars, the shoe shine boys, the truck stop all stars, the country club golf hustlers, the Lester Diamond types. Um, and they pushed the stock down to 17, like it was going bankrupt, like it was going out of business. And then you look at the reality is they just grew their sales from 7 billion to 14.5 billion year on year. 110% growth. And why? Because they're one of the biggest suppliers for Nvidia and all the other chip makers for AI data centers. And if you think this CEO is some kind of crook who doesn't know what he's talking about, watch the 20-minute Reuters talk. I know that was sponsored, but he's talking about why the growth of AI data centers is critical, how they differ from traditional data centers, why SMCI is perfectly positioned to exploit all this demand, how their liquid cooling products are sort of revolutionizing this thing. And when I'm hearing him, and he talked briefly about the accounting issues, and he's saying, like, you know, we made mistakes. We grew so fast that we were not prepared for the regulatory compliance, all that stuff. But he's like, we have a new auditor. Pardon me, guys. We're going to get it together. So this stock should be over 100. I mean, if you read the bearish articles on this thing, they're like, okay, they're only going to sell 25 billion this year. So top line growth is only going to be 70%. And EPS growth is deteriorating. EPS is still going to grow a lot. Yes, they face competition. Yes, they face margin pressure. But only in bizarro world that doesn't make any sense can they say a company selling almost $15 billion and then they grow on top of that 70% in 1 year, and they try to sell you that that's bearish. They're just telling you up is down, down is up, you're stupid, you're fat, you should have stayed and gone to medical school. Oh wait, no, that's a different issue. Anyway, guys, welcome and hello, hello and welcome. I just, I know very few people watch this, and most of you guys are broke losers. So I know this isn't going to affect anything, but I just look at this as an opportunity. I'm like, 35, it's still trading under a $20 billion market cap. And they're going to do 25 billion in sales this fiscal year. And this is all because Ernst & Young quit. I mean, it doesn't make any sense. How bad can this revenue recognition issue be? And no one's alleging they made up revenues. They're saying they improperly recognized them in a forward quarter. And somebody made the point a lot of this could be from the sales team trying to get their commissions earlier. Sorry, guys. So I'm seeing the way this stock has been trading, and they tell you, oh, it's going back to 12, it's going back to 15, it's going to go back to 17. And then all the time they're saying that, they're churning it between, sort of 31 and 33 and just accumulating a ton of shares. I'm seeing this huge daily accumulation. All the time they're saying the stock is crashing, and it's not crashing. And they're shorting and borrowing, and somebody's lending the shares at negative interest rates. This has all been a Fugazi shakedown. They got retail to dump in the teens, and they're going to run this thing right back to the 50s, 60s, 100s. It's going to happen, plain as day. The CEO's like laughing at all this. He's like, we've been around 20 years. Yeah, we've had problems, but this is one of those things where right when a company is at their very best, experiencing explosive growth, right at the right place, right at the right time to capitalize on AI, on data centers, on Tesla, on all these companies spending billions and billions and billions of dollars, trillions of dollars. I mean, the CEO's talking about data centers are currently taking about 3% of the world's energy consumption in electricity. Just in a few years, that's going to be 8%. And SMCI is critical to exploiting that because their liquid cooling racks, like right now, traditional rack, I don't know what all this stuff means exactly, but it's pretty easy to understand in terms of energy consumption. So they're working on a rack right now, which is over, he said, 200 kilowatts. Right now it's like 10, 20. Traditional is 3. So the density, they're expanding the density by factors of like 100. And they are leading this. They are selling retail a Fugazi, these shorts. It's made up narratives. It's the exact same thing they did to SoFi. Remember when the Chia Pet was out saying, hey, SoFi's going bankrupt. They're going to have to do a bad money raise. And then the SoFi's down in the 4s. And now the guy's, been radio silent forever, and SoFi went up to 17. But they wanted you to dump at 4. They didn't believe what they're saying. None of these guys believe what they're saying. It's all a Fugazi. The whole market is a Fugazi. All these media talking head U-turners, it's all bullshit. Look at who's paying these guys. Follow the money. Retail's not paying people to spread propaganda. All we can do is cut through it with logic. Buy low. Buy the panic. Why would this company go bankrupt? They're like, oh, they have to, this pipe thing. They bring all this up during a quiet period. Barron's hits them over and over and over again. And then lo and behold, today, yesterday, a couple good articles, and then the stock flips. Then the market makers completely flip it on Christmas Eve when their short-wing colleagues aren't at their desk to try to respond with their fire extinguishers, to try to step on our low-hanging fruits, slipped out of the side of the old tighty-whities, if you know what I mean, the old twig and berries. You guys getting older, you know what I'm talking about. The old London Bridge is falling. Welcome and hello, guys. Enough about my testicles. Testicles. Excuse me, guys. It's not appropriate for the holidays or a family program. But welcome and hello. Hello and welcome. Welcome and hello, guys. Tune Poco Moss. I just, again, I know I've been harping on this stock a lot, and everybody's telling me, oh, you're a big idiot. It's going down to 10. It's going to 17. It's doing exactly what I told you it's going to do. Exactly what I told you it's going to do. It's consolidating in the low 30s, and it's going to make a big move up when nobody's expecting it. They're going to catch the other shorts off guard, and this is exactly what they're doing. And this thing, 50 is absurdly undervalued. 60 is absurdly undervalued for this growth. 100% year-on-year growth going into 70% year-on-year growth. Big deal they didn't grow that fast for one quarter. Yes, the accounting difficulties, all these irregularities, all these improprieties. It is a big problem, but it is not a black swan. It's not an extinction. Even if everything they're alleging in this Hindenburg is true, this whistleblower guy, this double dealing, this family relationships, inappropriate, blah, blah, blah. None of it makes any difference to the trajectory of the business. Look at the revenue growth. Look at the EPS. Look at where the AI data center growth is projected to be. And JP Morgan said it themselves before they had a huge cut to the price target. The customers aren't going away. The orders aren't going away. Falling back now below 35. But, this is expected. I'm not saying it's going to go up to 50 today. It's not. But it's going to go up there. Believe me. Not too distant future. They're going to file these financials. It's going to be exactly what management said, $6 billion. 25 billion projection for the year, possibly a little bit more. These orders are already locked in. These data centers don't materialize overnight. And the CEO, was talking about how they're able to do this so fast. They bring traditional data centers take a few years. They're bringing data centers online in a matter of months because of, how their servers are done. So, this is free money. This is free money. I mean, that's the way I look at it. Let's get a look at the live short interest, guys. Let's see. So yeah, they've returned about 30 million shares the last couple weeks. Short interest way down, and then they're even returning shares today. Cost to borrow is up. So this is really what we want to see. The shorts between sort of a rock and a hard place. Bulls that have been accumulating down at these levels. Because shorts are waiting for some other shoe to drop, some big negative catalyst. I mean, all the negative catalysts already hit. The new auditor's not going to quit. I mean, they're going to file these financials. They have to. They're going to hire a new CFO. They have to do that. They're going to make other key hires. Those are all good PRs. They're going to release new products. They're going to have new customers, new contracts. If they can build your data center for the best cost, with the best product, the highest density, the most reliability, you're really not going to be concerned about some marginal accounting irregularities that probably happened in years past. And they already got rid of the people that are, supposed to be responsible for this stuff. So I'm seeing a ton of FUD that just does not comport with reality. And just watch the CEOs talk. Just take 20 minutes. And if you look at the financials and you listen to that guy talk about the future of this company, the future of AI, the future of data centers, how they fit in, how they're positioned better than anyone else for these liquid-cooled racks that are just going to fuel the future. And everything is AI. Everything. GPUs, homie. GPUs. Oh, it's still absurdly low, Steve. What's up? Did you see that article that SMCI is a pipe dream? I'm not sure what that means, Marco. No, I probably saw it, but made calls February, March, yesterday. Yep, that's right. Renee Gomez, 11,000. You're up 30,000 today. Hey, congratulations, Renee Gomez. Good for you. Very happy for you. That's awesome. It's still low. It's still absurdly low, Steve in the mountains. It's still absurdly low. Bought some old world Christmas ornaments made in China. That's funny, Carl. Yeah. SMCI margins. The margins are not super high, but it's you have to go over. I don't know them off the top of my head. I think roughly it's like 13%. But they faced some margin pressure, so the margins went down a little bit. But it all depends year to year, quarter to quarter, individual projects. But I'll actually believe it or not, Carl. One of these days I'll actually pull up the financials and kind of go over all that stuff. But you know me, I'm not an X's and O's guy. I'm a big picture kind of loudmouth idea man. So a bit of a huckster, a snake oil salesman. I used to do revivals throughout the South, big tent revivals, but there's no money in that anymore. You pass the hat these days, somebody just steals your hat, runs away. Good morning, Danny. Merry Christmas. All the best to you and the princess. Absolutely. You as well. And you and your family as well, Mustang Rider. Thanks for joining us. Hello and welcome. We got, let's see, we got the great Mustang Rider in the house. Thanks for checking in. Of course, the great Carl Seamark, checking in with us. Merry Christmas to you as well, Carl, the Mattress King of Chicago. The great M. Russo is here. Thank you for checking in, M. Russo. We got the Mustang, we got Mopar here. Go Raiders, couldn't agree with you more. And of course, we've got Renee Gomez. If News 10K filing comes out, how much do you think this could move? If there's no big restatements and the financials look really good and they forecast strong demand and they're actually looking at 25 billion sales for this fiscal year, the stock should be at least 65. I mean, I really think it should be more of 100, but they have to get the fear, all these difficulties out of their way before it's going to approach those levels. I'm not saying it's going to go up there, anytime super soon. But obviously they're, pushing back down on it. So it's back down to 34.50, 10. But this is fine, guys. This is healthy. It's not, you don't want like moonshots. You don't want shooting star patterns. Obviously people are going to take profits and come in, and the shorts are going to wake up and get their algos up and start pushing back down. That's all. But there's only, as far as real buyers and sellers, there's only buyers. Nobody's selling here thinking this stock is actually worth 15 or something, or it's going to go bankrupt. I don't think any market makers think it's actually going to get delisted. Now, they might have to restate some stuff. The key is just be honest and transparent, work with the new auditor, get through the problems, take the short-term pain. If you have to take some write-downs and stuff and the stock goes back down, maybe it'll go down, the 20s, mid 20s. It's possible. I don't think so, but it's possible. I'll just, I'll have to sell some other stuff and just buy as much as I can. But yeah, this mid 30s trading, way under this year's sales. It's profitable. It's growing. The growth isn't going to stop. I think it's going to just accelerate. I mean, I think this stock's a gift, but it's fraught with risk. They didn't file their financials. Their auditor quit. So those are huge, huge, huge red flags. So you just have to be aware of the risks on a stock like this. But it's a risk reward thing. So when you think a stock is undervalued and should be 3x this value, that type of upside, does come with significant risk. So, you guys should always be aware of that. Do your own research, blah, blah, blah. But, you guys are all reasonably smart who watch this channel. Short squeeze. I don't think it's really going to short squeeze, Renee, because the shorts have already started returning shares and stuff, and a lot of them were covering down in the low 30s. So definitely shorts covering can add to the buying pressure, but it's not going to be like a squeeze, like a, 30. If it goes way up like that, I think it's going to be more, market makers just accumulating shares as fast as possible, trying to get out ahead of the rush, the stampede. And shorts covering certainly can play a role in that, but the short interest is just not super high. So, take it. Yeah, it's just take it for whatever, you will. But yeah, the short, returning 1.3 million shares, cost to borrow pretty high, coming back down. But see, short interest is only about 17% of the free float, 87 million shares. Utilization is only 42%. So short squeeze really only happens when shares get super scarce on the market. Cost to borrow goes way up, shorts start to cover, the whole thing kind of gets into that vicious cycle, and then they have no choice but to just cover as fast as possible. Adds a huge amount of buying pressure. So we just have to see. I mean, anything's possible, but it looks like this is kind of losing steam here at 6%, like 35, it kind of gave up. So we just have to see if more buying pressure comes in. But it's an odd holiday because, a lot of the market makers are in their ski cabins or in Europe or wherever the hell they are. So they're not like us schlubs sitting at our computers trying to trade this turd. But still, it's like it has to, see if it holds on at 34. If it holds on at 34, it'll probably continue to go back up. It did, give a little hitch here, but if you kind of pull out on the chart a little bit, again, it's kind of exactly to where it fell. So we're right again to this huge gap. You could argue it filled the gap here. It didn't exactly fill it, but this candle was just a pump. See, to really fill a gap and get back to this equilibrium, get back to this trend, you have to kind of make a market up here. It's not enough to just pump it here and sell one share. That doesn't, filling the gap is it's a technical, stupid thing, but it's more about getting back to the trend line where the algos were buying the stock before. And then you kind of fill the gap because you get rid of all the schmutz down below. But I don't know. It depends how you look at charts, how you look at technical analysis. And, to me, it has to be informed by sort of the fundamentals, what's going on. If you just look at the chart and you don't understand how undervalued this company is, fundamentally, I think you're going to misunderstand what's actually going on here, and what looks like kind of a sell-off and, a normal churn is really heavy accumulation. And basically, I think, some retail and some market makers are harvesting tax losses, and that's letting others, buy, start a position at an attractive level. But obviously the shorts woke up. They're pushing back down 34. But we'll just have to see how this goes here today, guys. Fun one to watch on a holiday. But of course, I know you guys have other stuff to do, families, etc., etc., etc. So want to wish everybody a super happy holiday, Merry Christmas, all whatever you guys celebrate. And yeah, this is, again, just dip back down to 34. So, obviously the market makers are all over this one, and it's a hot potato. But I hope you guys have a great day. It's un poco mas. Let's see. Bought 2K shares, Renee Gomez. Yeah, so hope you guys have a great day, and I will talk to you guys later. Peace. I'm out.